Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker, licensed real estate broker right here in Santa Clara County, California, member of the National Association of Realtors. But please do not hold that against me. Coming at you once again with the latest news and information relating to real estate or just owning a home that I think will help you out most. The goal is always to leave you with the maximum amount of knowledge when we finish one of these things. So let's jump in and see if we can't make that happen. Now, in the spirit of maximum knowledge, see, I got a segue in there. Where that worked. You can head on over to soldbyrobert.com. And even if you never plan to sell your house ever in your life, let me suggest you sign up for the tool that's going to tell you what your home is worth, which is, in the case of someone who never wants to sell, maybe not the primary reason. But this new tool that I'm offering to folks who visit my site gives you an unbelievable spread of information relating to your property. It lets you know your equity position, lets you do what if scenarios on should I refinance, tells you if it makes sense to refinance, gives you current rates, lets you know what the effect would be of you paying down your mortgage faster, how much sooner you'd pay it off, and how much less you'd pay in interest. A lot of great tools, exploring whether or not you want to do any Airbnb or vacation rental style stuff with your home from time to offset some costs. Anyway, it's a great tool. It's completely free to you. And I'm offering it to clients who visit my website at soldbyrobert.com. Just go there, do the what is my home worth and enter your address, and you'll get kicked off. And once a month, you'll get a great perspective on what's going on with your property. It's stuff you should be doing at least once a year already, and this does it for you automatically every single month. So check that out. I think you will find it has some great value. And if you don't like it, you can always just unsubscribe. Okay, so let's jump in. We're going to talk insurance, and this is a big one because, as folks who live in California know, one of the other main costs that we all have to account for when we live here is insurance costs. And the fewer insurance providers that are available, the more expensive it gets, right? A competitive, robust market for anything, whether it's widgets, computers, cell phones, whatever, the more people out there offering a service always ends up being a better thing for the consumer, whether it's costs or coverage or whatever else in terms of options. Some very creepy news that is very California specific, and there's a lot of interesting spin on this topic coming around out in the world. You can have this conversation with your insurance provider. They may or may not have a big handle on why. They may simply have just read the memo from the home office that they're not going to do any more insurance policies in California. But this is not a small thing. And as it specifically relates not just to your house, but to other expenses, right? As we focus here on real estate related issues, when you're trying to get home insurance, you often are now going to find yourself, if you're someone in a dicey situation, and by dicey, I mean, let's say you've purchased a home and you are in a flood zone, or you are in a seismic activity area that's designated as higher risk, or you are in an area that is wooded. All of these various kinds of things are going to play into you not being able to get insurance at a reasonable rate at all. And a lot of the spin that I'm seeing from like CBS, ABC, NBC, Fox, CNN, everybody is that, well, this is just because the costs are so high, and because these natural disasters have been so common in California, the cost of rebuilding things is more expensive. And that may all to some degree play into it. But you know what? It's always been a little bit more expensive to get stuff built in California. That line doesn't fully cover it. I did find one outlet called the City Journal and I have no idea what their leanings are. This is literally the first time I've ever discovered them. It's a magazine focusing on economy, finance, and budgets. And their rundown, I think, is more accurate. Now, I talked to several local insurance agents and just had a casual conversation with them. And their answer was, the biggest problem is the government-controlled system. For those of you who don't know, insurance is a state-by-state thing. So whatever crazy stuff your individual state decides to impose gets imposed. And at some point, a business has to make a decision. Are the regulations I'm forced to comply with so burdensome that they end up costing me more than I could ever hope to make in this market? Then what do you do next? You stop doing business in that market, and think about what it takes. Think about the state of California for a second. Think about how many people live here and realize, wow, a company is willing to write off the state of California one of the most populous states, one of the states that has the highest income per resident, and is going to say, well, you know what, it's no longer worth it for us to do business here. And I know a lot of I can already hear the political winds, blowing, where everyone's going to say, well, it's those greedy insurance companies. Well, if you're doing something, if you're providing a service, if you're going to work every day, 9 to 5, I assume you're expecting to get paid more than it costs you to get to work, feed yourself at work, and wear clothes at work, right? You expect to get more. You're providing something that you expect to get compensated for that goes beyond what it costs you to provide what you've offered up to that company, right? It's always interesting when people don't want to extend that same courtesy to a corporation. Now, the problem here is that the compliance regulations within California are oppressive enough that it is suppressing the part of insurance companies even want to play the game here. They don't even want to be involved. So let's go ahead and run through. I've got a few articles. I'll put those in the show notes. And again, as always, I would love your feedback on this. I've had a couple of great interactions with folks relating to the last one, the last podcast we did relating to the 1% down loan scenario. And I had some great exchanges with some folks on Twitter and some direct folks via email. Always love it when I get some interactions back and forth that really want to discuss these topics in a way that really just keeps us all smarter, right, when we're thinking about things. All right, so let's go ahead and take a look at this. This is from Reckon. Again, the very first time I've ever interacted with this website that just showed up when I did a search on this. Their headline, insurance companies are fleeing climate vulnerable states, leaving thousands without disaster coverage. And that's an interesting take, not really the whole story. And the story itself is very much written around the evil corporate vibe. It starts off with, as California recovers from its most recent and bruising round of extreme weather, which saw plunging temperatures and snow followed by flash flooding and landslides throughout the state, its residents must contend with another chilling reality. Home insurance companies are scaling back the coverage they offer residents, leaving many facing the prospect of taking more expensive insurance known as the insurer of last resort. And this goes on. It doesn't really offer anything horribly innovative here, but we also have CBS. I wanted to give another one. This is CBS Los Angeles. Major car insurance companies getting out of California. Major auto insurers are pulling, and this is obviously auto focused, but this is happening across the board. Major auto insurers are pulling back in the California marketplace because they are saying our drivers are just too expensive to insure. Yeah, again, if you look more deeply into this, they don't really bring it up here, but it really is more about what the insurance commissioner requires of insurance companies rather than that. There are other states that have much bigger problems relating to how well their drivers are driving. Trust me, as someone who spent a year in Florida, I can tell you they suck. Florida's got a lot going for it in terms of some of their business attitudes and the ways that they don't tax folks as much as in other states. But boy, some of the worst driving I ever saw came out of Florida. And the spokesman for the insurance commissioner, and this is a California person, right? This is a California government person. This isn't some other group. This is the government of California. While insurance companies are focused on increasing rates, the Department of Insurance is focused on protecting drivers and helping them get the most value from the premiums that they pay. And it is totally up to these businesses. Okay, you get to set the rule by law. You get to set the rules on how we play the game here in California. And at some point, the rules just get to the point where no one wants to play. So maybe it's time to look at the rules, is a suggestion from me. Okay, next. This is from the California Globe. Again, it's amazing how many outlets that are less mainstream I had to go to some of these. First time I've ever done California Globe as well. Like a good neighbor, State Farm isn't there. State Farm to no longer accept any new property casualty insurance applications in California. State Farm Insurance, the largest property and casualty insurance company in California, and I once had State Farm for mine, announced Friday they would no longer be accepting new applications. So this was on May 27th. So just this last Friday. Or any kind of insurance other than personal vehicle insurance due to large increases in construction costs and inflation. I find that interesting. Construction costs, again, I mean, I get that that's a real cost in relation to those things. Why you would make a long-term decision relating to inflation is interesting, unless and I didn't, the notice I read didn't indicate that this was we'll revisit later kind of a scenario. The Illinois-based company specifically noted in a press release on Friday that all new applications for business and personal property and casualty insurance will no longer be accepted in California beginning May 27th. Quote, State Farm General Insurance Company, State Farm's provider of homeowners insurance in California, will cease accepting new applications, including all business and personal lines, property and casualty insurance, effective May 27th. This decision does not impact personal auto insurance. State Farm General Insurance Company made this decision due to historic increases in construction costs outpacing inflation, rapidly growing catastrophe exposure, and a challenging reinsurance market. Quote, we take seriously our responsibility to manage risk. We recognize the governor's administration, legislators, and California Department of Insurance for their wildlife loss mitigation efforts. We pledge to work constructively with CDI and policymakers to help build market capacity in California. However, it's necessary to take these actions now to improve the company's financial strength. We will continue to evaluate our approach based on changing market conditions. State Farm independent contractor agents licensed and authorized in California will continue to serve existing customers for these products and new customers for products not impacted by the decision. So if you read between the lines there a little bit, there is clearly a thread that goes through that talks about requirements from the Insurance Commission. But of course, like any good soft peddling corporation, they don't want to come out and just say something along the lines of, well, there's the regulations that increase our costs relating to insurance fulfillment are just too oppressive in California. And then we go to the City Journal, and this one was an interesting one, and this is the one I wanted to end with because I think it kind of gives an interesting take on it. California and crisis seem to go together as the state bounds from one intractable problem to another. The recent spate of flood-level storms in Northern California focused attention on its ailing levees as an atmospheric river pummeled the low-lying Sacramento region. A nearly endless parade of trucks carrying rubble raced to shore up an aged system. And that's also something else to keep in mind. This when you are dealing with a state that has been as poor as California has been at paying attention to actually vital infrastructure that relates to managing scenarios like this. It's always interesting to me when California will point the finger at another state and tell them that they suck. Like Texas, for instance, when Texas had their power outage, right? Well, California's had to buy its power from other states for decades, has not allowed any new upgrades to our infrastructure, to our power grid. And it's also now, with what's happened this last winter, demonstrated how horrible they've been at keeping up the infrastructure that relates to flooding. All right, so it would never dawn on the state's brain trust to invest in infrastructure improvements before near catastrophic failures stressed levees to the breaking point, nor would it dawn on, okay, well, we don't need that. That's less than constructive. California's electrical grid was overstressed, yes. Where was it? I read this earlier. Now, one thing that this article mentions that I think really kind of hits home and really paints the picture, right? I don't think you're going to get insurance companies unless they have completely written off California and just said we not only are we out, we're forever out. I mean, but no company is going to do that, right? No company is going to outright call out, I think, a state unless it gets to the point where legal action has to be taken, which would be the closest they'd come to, right? I think they would still soft shoe on things like that. And in the interviews before court start, say things like, we want to work cooperatively with local government to figure out the best way to provide the best services to the citizens of California. And we're hoping that this legal action will help pave the way to that understanding and meeting of the mind, right? That's the kind of stuff that you'll get, right? Like, that's what you always get. But this had some stuff here at the bottom that I thought was really focusing in on the problem. Quote, the Department of Insurance uses a formula to determine rates partly on a company's revenues. What? I guess that makes sense when you take into consideration the progressive income tax, that if you make more, you get taxed more. But in terms of encouraging growth in different business sectors, I think that's a really bad call. In State Farm's case, the department, along with a group called Consumer Watchdog, calculated what the firm's premiums should be based on an out-of-state group of State Farm-affiliated companies. Though a state appeals court rejected this method in a harshly worded ruling, and a San Diego County court nevertheless awarded the Consumer Watchdog $2.2 million in legal fees for its far-fetched opposition. So the insurer is, in this case, State Farm, the insurer had to pay out millions of dollars to a public interest group just to raise its premiums. Now, and I'm not arguing that we should make it ridiculously easy for insurance companies to just raise their premiums. But in a way I am. If every company could simply do that, none of them would, right? If it suddenly became easier to provide insurance in the state of California, we would double the number of insurance companies in California, and they would all be bidding in a bidding war in competition for the largest number of people with policies with their company. But that's not what California does. California makes it ridiculously hard for insurance companies to do business in the state. And we're just at that tipping point where everyone's starting to panic because some of them are simply saying, all right, I'm taking my ball and going home. This is stupid. This makes no sense for us to continue to participate in this bizarre system you've created here. Okay. Such cases explain why California insurers can't charge rates that reflect their actual risks. They also show why there's so little competition in the state's insurance industry. Over the long run, competition keeps rates low. Insurance commissioners can certainly hold rates down by edict, but the result is a contracting market. In other words, if by edict, this commissioner, the insurance commissioner, keeps rates low, they are simply not going to create new policies, and if legally allowed to, will end any policies that they have and move out of the market. And if they don't, they will simply let policies expire or end without renewing, and then they will leave, which is what we're tending to see in the insurance business right now. Let's see. Homeowners then have little choice but to buy inadequate policies in a government-run marketplace. And I realize that a lot of you disagree with me, but if it's government-run, it is not going to be the most efficient way for you to get a service or to pay for a service or to get the best deal on a service. Prop 103 isn't the state's only insurance problem. In 2018, then Governor Jerry Brown signed a law banning insurance cancellations and non-renewals in wildfire-affected areas for a year after the fires. And Lara continues to force the already overstressed FAIR plan to offer additional coverage. Such edicts further burden an overextended backup insurance fund. So that I think that's the big picture of it. I'm going to strongly suggest, because it is the prevalent headline is so not that. The prevalent headline is so focused on evil corp that you really need to look into this a little bit more. And I hope this has given you some insights into that. So if you come across anything in the next opportunity you get, if you're a California resident and you get opportunities to cast your vote for some sort of insurance reform, or if you're enthusiastic about a national candidate who talks more about deregulating the insurance, or I don't even think deregulating would be the word. It would be universalizing insurance so that insurance is easier to get in all the states rather than just in one state. I think that makes some sense, right? As long as we're reducing the limitations on these companies to provide the insurance service in your area, that is good for you. I mean, is it better for you to have 5 choices or 50 choices? Those guys competing, they're going to end up charging you less and less to gain your business. And I just think that works out better for everybody. All right, folks, I think we've just about covered that one today. If you've got any questions, feel free to reach out. Again, you can find me at soldbyrobert.com, where I've got some great tools. I also have some great tools for buyers. I have a very interesting, it's from the same company. That's the tool I'm using that's so amazing is HomeBot AI. And there's also a buyer's side of that one that is also super interesting. It makes the exploration process a lot better, but it's not a great standalone if you want to get daily updates on what's available. You can find out what comes out daily, but you have to proactively go visit it for that. So I'm not a huge fan of that part of it, but for the getting up to your elbows in interesting ways to look at the marketplaces and focus in on homes that are, either at X, offer the areas that tend to have the most 3-bedroom, 2-bath homes or whatever. There's some interesting, very, very not typical ways that you can focus in on property. So feel free to check that out too if you're in the market to whether you want to buy or not. Just an interesting way to look at the markets. It's a very cool tool. Again, front page of soldbyrobert.com. All right, folks. As I mentioned before, the goal is always to leave you with more information on the table than I take up in your time. Absolutely hope we've accomplished that this time around. Thanks for listening, and I will talk to all of you next time.